If you've been following along with our IRS Notice series, welcome back. So far, we've discussed the CP14, the CP501, and most recently, the CP503. Each notice become a little more direct, a little more urgent. Today, we've reached one of the most important notices in the entire IRS collection process, the CP504 notice. This is the point where many taxpayers become genuinely concerned. They read the words, Notice of Intent to Levy, and immediately assume the IRS is about to empty their bank accounts or garnish their paychecks. Fortunately, that's not what this notice means. Today, we're going to walk through CP504 notice together. We'll discuss what has changed, what the IRS is actually saying, what intent to levy means, and why this notice differ from every notice we've discussed so far, and what steps you should consider taking next. My name is Shane Harris. I am an enrolled agent with Profit First Taxes, and every week I help taxpayers understand IRS notices, resolve tax problems, and make informed decisions before situations become more serious. Let's get started. Today's notice move us into the red section of the Profit First Taxes IRS stress scale. This is the first notice in our series that I've placed in red. Now, red doesn't mean panic. It means take this notice seriously. Don't ignore it and don't wait to understand your options. The CP504 represents a significant change in the IRS collection process because the IRS is now notifying you that it intends to levy certain property if the balance remains unresolved. That's very different from simply sending another reminder. Let's look at where we are. We started with the CP14, then came CP501. After that, the CP503. Each notice becomes progressively more urgent. Now that we've reached the CP504, this is where the IRS shifts from reminding you about the balance to explaining that collection action may occur if the balance continues to go unresolved. That's why this notice is such an important milestone in the collection process. This has become one of my favorite parts of the series as with the previous episodes, I'm using a sample CP504 notice for educational purposes. Your notice may look slightly different depending on your tax year or your specific circumstances, but the purpose of the notice is generally the same. Let's read it together. The very first thing I notice isn't the balance, it isn't the penalties, and it isn't the interest. It's the title. Notice of intent to seize, levy your property or rights to property. That's a sentence that understandably gets people's attention. But let's slow down for a moment. Notice what it says. Intent to levy. It does not say the IRS has already levied your property. It says the IRS intends to do so if the balance remains unresolved and certain legal requirements are met. Those are two very different things. Now, let's read the opening paragraph. The IRS says, this is a notice of intent to levy your state tax refund or other property. Again, notice the wording. The IRS is notifying you of what it intends to do if the balance isn't addressed. This isn't saying your wages have already been garnished. It's not saying your bank account has already been levied. It's telling you that the collection process has reached a much more serious stage. The next sentence is equally important. The IRS explains that if it doesn't receive payment or hear from you to make payment arrangements within 30 days from the date the notice, it may levy your property or rights to property and apply those funds towards the balance due. The 30-day time frame is one of the biggest differences between the CP504 and the earlier notices. The IRS is now giving you a specific deadline before certain collection actions may begin. That's why I encourage taxpayers not to ignore this notice. There is another change I want you to notice. The balance is no longer described as being due by a future date. Instead, the notice says amount due immediately. That's another indication that the IRS considers this matter more urgent than the previous notices we've discussed. Now, let's continue working our way through the notice. Just like the previous IRS notice we've discussed, the CP504 includes a section titled What You Need to Do Immediately. But this time, the wording is noticeably different. Instead of asking you to pay by a future date, the IRS now says the amount is due immediately. That's an important change. The IRS is communicating that it believes you've already had multiple opportunities to address the balance. This notice isn't the beginning of the conversation, it's another step later in the collection process. If you agree with the balance, the IRS instructs you to pay the amount due immediately or contact them to make payment arrangements. The notice also reminds you that if the balance remains unpaid, interest will continue to accrue. Additional penalties may apply, and the IRS may file a notice of federal tax lien. Again, notice the word may. The IRS isn't saying notice of federal tax lien has already been filed. It's explaining another action it may take if the balance continues to remain unresolved. Now, let's look at what the notice says if you disagree with the balance. Just like the previous notices, the IRS encourages you to contact them to review your account. It also states, we'll assume you agree with the information in this notice if you don't hear from us, or if we don't hear from you, rather. That doesn't mean you've lost your rights. It simply means the IRS will generally continue moving forward with the collection process unless you raise a question or resolve the balance. That's one reason I encourage taxpayers to address IRS notices as early as possible. Now that we've reached what I believe is the most important section of today's notice, the section titled Notice of Intent to Levy, the notice explains that this is your official notice of intent to levy under Internal Revenue Code section 6331D. That's a legal milestone in the IRS collection process. But I also want to be very careful not to create unnecessary fear. Many taxpayers hear the word levy and immediately assume the IRS is taking everything they own tomorrow morning. That's not what this notice is saying. Here's what the notice actually says. If the IRS doesn't receive payment or hear from you within 30 days from the date of this notice, it can levy your state tax refund. Notice something very important. The notice specifically mentions your state tax refund. That's because the CP504 serves as the notice of intent to levy for your state tax refund. The notice then explained that in most other situations, before the IRS levies other property or rights to property, you'll receive another notice that gives you the opportunity to request a collection due process hearing, unless one has already been issued. That's an important distinction. One of the biggest misconceptions I hear is, I received the CP504 so the IRS can immediately levy my bank account. Generally speaking, that's not what this notice is saying. The CP504 is a very serious notice, but it's also important to understand exactly what rights you still have under the law. The notice also gives examples of what the IRS considers property or rights to property. That includes things like personal assets, Social Security benefits, wages, real estate commissions, bank accounts, and other sources of income. Now, just because those items appear on the list doesn't mean IRS is immediately taking them. The notice is explaining the type of property that may become subject to levy if the collection process continues. Again, understanding the notice is just as important as reading it. The next section introduces another important concept: your rights to appeal. The IRS explains that if you disagree with its intent to levy or file a notice of federal tax lien, you may have the right to request an appeal through the Collection Appeals Program, often called CAP. Before the collection action takes place, the notice also explains that CAP is different from a collection due process or CDP hearing. Those are two different appeal procedures with different rules. I'm intentionally not going into details today because appeals deserve their own dedicated video. For today, I simply want you to recognize that this notice also explains your rights, not just the IRS collection authority. One thing you'll probably notice about the CP504 is that the IRS is no longer simply asking for payment. It's also explaining what may happen if the balance continues to remain unresolved, while reminding you that you still have rights throughout the collection process. That's why this notice is so important. Understanding it allows you to make informed decisions before the situation progresses further. Now, let's answer one of the most common questions I receive. What happens if I ignore the CP504 notice? The short answer is the IRS collection process continues. But unlike the previous notices, the CP504 represents a significant legal milestone. This isn't simply another reminder. It's the IRS notifying that certain collection actions may occur if the balance remains unresolved. That's why I moved this notice into the red section of the Profit First Taxes IRS stress scale. Whew, what a mouthful. Not because I want you to panic, but because I want you to understand the seriousness of where you are in the collections process. Let's look at our collection timeline one more time. The CP14 introduces the balance. The CP501 reminded you about the balance. The CP503 became more urgent. Now we've reached the CP504. This is where the IRS begins discussing levy action. That's a major change from every notice we've covered so far. If you've been following this series from the beginning, you've probably noticed that the IRS didn't jump straight to this notice. It gradually increased the urgency over time. That's exactly why I created this collection timeline. I wanted you to see that the IRS collection process follows a progression. Understanding the progression helps remove some of the fear because you know exactly where you are and what you may come to and what may come next. Now, let's look at another important section of the notice. One section that surprises many taxpayers is the discussion about passports. The IRS explains that under the FAST Act, taxpayers with a serious delinquent tax debt may be certified to the U.S. Department of State. If that happens, the State Department may deny a passport application or renewal, or in certain circumstances, revoke or limit an existing passport. Before anyone watching start to panic, let's keep reading. The notice also explains what generally qualifies as a serious delinquent tax debt. It isn't simply owing the IRS money. There are specific legal requirements that must be met before certain for certification occurs. This is another topic we'll cover in a dedicated video because there are several important exceptions and relief provisions that taxpayers should understand. For today, I simply want you to recognize why this information appears in the CP504. The IRS is explaining additional consequences that may arise if tax debts continue to go unresolved. Now let's continue reading. The notice explains that if the debt hasn't already been paid, a federal tax lien has already arisen by operation of law as a claim against your property. It then explains that the IRS can file a notice of federal tax lien publicly, establishing its priority with creditors, and that it may levy, subject to any applicable collections due to process rights. This is another area where terminology matters. A federal tax lien and a notice of federal tax lien are not the same thing. There's a distinction many taxpayers don't realize. We're going to dedicate an entire video to federal tax liens because it's one of the most misunderstood part of the IRS collection process. For today, I simply want you to recognize that the IRS is explaining another possible consequence of the balance remaining unresolved. The notice also explains that if a notice of federal tax lien is filed, it may make it more difficult to sell property, borrow against property, or obtain financing. Again, the IRS isn't saying that has already happened. It's explaining what may happen if the collection process continues. One thing I appreciate about the CP504 is that even at this stage, the IRS continues reminding taxpayers that penalty relief may still be available in appropriate circumstances. The notice discusses situations such as serious illnesses, the death of a family member, or the loss of records due to natural disasters as examples of circumstances that may support a request for penalty relief. It also mentions that some taxpayers may qualify for first-time abate based on a clean compliance history. That's encouraging because it reminds us that even when someone receives a CP504, there may still be opportunities to reduce the overall balance depending on their circumstances. If you've watched this entire IRS notice series, you're probably noticing a common theme. Every notice becomes more serious, but every notice also continues discussing possible solutions, payment plans, offering compromise, penalty relief, appeals rights, and other collection alternatives. That's something I don't want people to overlook. Receiving a CP504 doesn't automatically mean you've run out of options. It means the IRS expects you to take action now. The sooner you understand your options, the better prepared you'll be to decide the best path forward. Now that we've reviewed the most important part of the CP504 notice, let's answer some of the most common questions I receive from taxpayers who receive these notices. Question 1. Does reviewing CP504 mean the IRS has already levied my bank account? No. Receiving CP504 does not mean your bank account has already been levied. The CP504 is a notice of intent to levy. It's the IRS informing you that if the balance remains unresolved, certain collection actions may occur. That's why it's so important to understand exactly what the notice is saying instead of assuming the worst. Question 2. Can I still set up a payment plan after receiving a CP504? In many situations, yes. In fact, the notice itself discusses payment plans as one of the available options for taxpayers who can't pay the balance in full. Whether you qualify for an installment agreement depends on your individual circumstances. But receiving a CP504 doesn't automatically mean you've lost that option. Question number 3. Can I settle my tax debt for less than I owe? Probably. The notice discusses IRS offering compromise programs and explains that qualifying taxpayers may be able to settle their tax debt for less than the full amount. However, not everyone qualifies. The IRS reviews your financial situation before deciding whether to accept an offer in compromise. Question 4. Should I ignore this notice if I can't afford to pay? No. One of the biggest mistakes I see taxpayers make is assuming that they shouldn't contact the IRS because they can't pay the balance in full. In many situations, there may be payment options, collection alternatives, or temporary hardship programs that's available. Ignoring the notice usually doesn't make the problem smaller. It often allows penalties, interest, and collection activities to continue. Question number 5. Should I panic if I receive a CP-504? Absolutely not. Take it seriously, but don't panic. Remember, the purpose of this entire series has been to help you understand the IRS collection process. Knowledge replaces fear. When you understand what's happening, you're in a much better position to make informed decisions. If there's one thing I hope you remember from today's video, it's this. The CP504 is serious, but it is not the end of the road. The IRS is telling you that collection process has reached another important milestone. It also reminding you that options may still be available. The key is addressing the notice before the situation becomes more complicated. The earlier you act, the more options you generally have available. If you found this video helpful, please take a moment to like the video and subscribe to the channel. Every week, I create videos that help taxpayers understand IRS notices, tax debts, collection options, payment options, and other tax topics so you can make informed decisions with confidence. If you're dealing with IRS collections and would like to discuss your situation, you can schedule a consultation using the link in the description below. And if you know someone who's staring at a CP504 notice and wondering what it means, share this video with them. It may help them resolve and relieve some unnecessary stress and point them in the right direction. Next week, we'll continue following the IRS collection process by discussing the notice that often creates even more concerns than the CP504, the letter 1058 or LT11, final notice of intent to levy and notice of your rights to and hearing. We'll explain how it's different from the CP504, why it's one of the most important collection notices the IRS sends, and what rights taxpayers have before certain levy actions can move forward. I look forward to seeing you then.